as a model, an operating model, if you want to call it, is phygital, right? While there is digital, while there is physical, we feel that there is an overlay between the two.
Okay.
And we have reached that sweet spot where we believe that both the spectrums of the customers with economics of scale coming in can be catered with this phygital model. What we have mastered is predictability, right? One of the things that we keep on saying, it's not a sprint, it's a marathon. It's easy to disburse a loan. That's the simplest of the problem, right? I'm sure you'll get lots of people who are wanting money, and that's the easiest problem. But to get the money back is also very important.
DPD Act, which is now being enacted, right, is pushing organizations. How do you collect? How do you store? How do you manage?
Right.
And there is not an awareness in the consumers as well, right?
Having worked in this industry for some time, I would say that it's. I mean, the power of hindsight. Let it be the power of hindsight. There's nothing more you can do.
True.
By reminiscing on things that have gone back in the past.
Welcome, Mathew, for on this platform today. Before I really start, why don't you introduce a little bit about HDBFS, and before that, do introduce about yourself as well, right?
So let me start with HDBFS. So we are a reasonably large NBFC. Obviously, NBFC means we are regulated by RBI, who is our regulator, and we are a subsidiary of HDFC Bank, who most of you would know as a large bank in India, right? We've been in existence since 2007, end of 2007, so more like 2008, and we are a startup in that sense. But all along the journey, what we have been trying to do is ensure that we are catering to the retail customers. Now, what's unique about us is when we say retail, it's a spectrum of customers who can span from microfinance to gold loan to personal loan, all the way up to the other extreme where it's commercial vehicles and construction equipment. But the focus is still retail, right? The thought process of having such a wide diaspora of products to go to the market is to just ensure that as a customer starts as a one-person company, all the way as they grow into larger fleet owners or bigger business owners, we are along with them in that journey. So we grow along with them in that sense, and we help them grow as well. Now, just to give a sense of the scale at which we operate, we're talking of nearly 1,800 branches pan-India.
Wow.
We have nearly 60,000 plus employees, which means that we do our credit, we do our collections, we do our sales. We don't outsource most of the things.
Fairly a large organization.
A very large organization, right? Now, being large obviously has its own set of challenges, and obviously that is where technology will play a big role, and AI is another area. Speaking a little bit about myself, I've been with the company for nearly 5 years, and prior to that I've been in NBFCs, banks, and even technology companies.
Excellent.
So I've seen a wide spectrum of action as technology evolves, as business demand grows, and how technology can empower business to take to the next level. Okay. So that's the whole thought process with which we operate.
Oh, great. Thank you.
You're welcome.
To be honest, this is a great platform, and let me introduce our topic today and the context of our platform today. I think we are going to talk about intelligent, inclusive, impactful credit journeys for New India. And we would like to feature you, Mathew Panat, on Crafting Bharat by Newsreach. Newsreach brings you stories of vision, innovation, and purpose, told by the leaders shaping modern India. India's financial story is changing rapidly, right? From first-time borrowers in the small towns to a digital savvy customers in metros. Expectations from financial institutions are evolving. Access, trust, and simplicity today matters hugely. As technology is accelerating this shift, one question becomes crucial. How do we scale finance without losing the human connection? Welcome to this episode of Crafting Bharat. I am Shalil, Managing Director, Ozonetel, in conversation with you, Mathew Panat, HDB Financial Services Chief Technology Officer, and to explore technology, trust, thoughtful design are coming together to shape the future of finance in India is what today's topic of discussion. This podcast is curated by Crafting Bharat and initiated by Newsreach with production partners like ST Smartcast. Thank you very much and welcome to the platform. Let me start with the first context, right? And I'll throw some data points, Mathew, at you. India's digital lending market is accelerating towards almost 500 billion plus today by 2028. And we are in 2026, it's hardly 2 years down the line. Loan approvals have gone from days to under 12 minutes. I mean, there are institutions who are saying that, I will sort of approve your loan real time and so and so. Now, there are two sort of India, Bharat, Hindustan which exist. One which is the top 20 cities, top 30 cities. And the other where the rest of the cities and urban, semi-urban, rural areas. And India is geographically a very diversified and widespread sort of country. What does Bharat mean for HDBFS?
So, let me just draw you to our tagline. It says reimagining opportunities. So for us, Bharat, the way we look at it, it's a wide untapped potential where we see a lot of opportunities, a lot of aspiration, where people given a chance would love to grow within their hometowns, their villages, their towns, cities, and so on and so forth. And there's no need for them to move to a metropolitan to take care of their life, right? So we believe that there's a huge opportunity to service such customers. And that's what we look at from Bharat as a perspective. We see them trying to make a livelihood, build on that, give livelihood to others, right?
Yep.
So they're trying to build an ecosystem, and we'd love to be part of that ecosystem, trying to help their needs of growing in that space.
See, just a related question, Mathew. Earlier, Bharat was looked at as a priority sector, mandated by government on a financial institute doing a financial inclusion.
Right.
But today, is there a difference in thinking or is it still the same?
So at our company, the way we look at it, that we were born Bharat first. I mean, that was the mindset and the culture we have inculcated along the growth journey we have seen. Right. For us, India is incidental because we continue to tap into Bharat as a segment. That's something that we seem to have found a sweet spot, so to speak. And we've been able to grow sustainably in a predictable manner. We are in the lending business. Obviously, there's some amount of risk as an entity that we need to carry, right? But as long as those risks are controlled and there are mitigants for all that stuff, we are very much focused on this geography or this segment of Bharat.
So it has now become a strategy than a priority sector.
I would say for us, it was always a strategy. What I've seen our competitors now doing is making that as a strategy. So as I said, we were like, people say about cloud first, being mobile first, and so on and so forth. We were Bharat first all the day.
Hey, excellent, excellent way. But if I may ask that question from you, technology is playing a very, very crucial role. And when we reach out to people through technology, we need to build trust and connections and sort of whether digitally or physically, branches or non-branches. But we have to cater to the two expectations. One is Bharat expectation, one is India expectations, right? The top 20 cities. Delivering to both together, sort of a big challenge. I have not seen organizations who can do a balancing act. Either they're very good in top 20 cities or they're very good in Bharat side. But both of them good is an institution like an HDBFS today, right? How are you able to make it at scale? My simple question.
And this is where technology comes in, right? If I have to cater to the Bharat, India by population itself is huge, right? Without technology, you can't do much. You cannot throw people at a problem beyond a point. So you need technology to come in. So the way we look at it is we, as a model, what we have, an operating model, if you want to call it, is phygital, right? While there is digital, while there is physical, we feel that there is an overlay between the two. And we have reached that sweet spot where we believe that both the spectrums of the customers with economics of scale coming in can be catered with this phygital model. Now, we've seen instances where people are comfortable talking to a human being, and we have seen instances where people are more comfortable talking to a machine, right? So we have seen both spectrums. Now, it's quite possible that an individual who's currently comfortable talking to an individual might tomorrow become a little more savvier or tech savvier and say that I'm more comfortable talking to a human being. The ability for that person to move from one spectrum to another spectrum is where technology plays a role, and that's what we have invested in. So that omni-channel kind of a thought process, irrespective of which geography, which language, which platform, and what time of the world you want to interact with us, we are there for you, and a conversation will be continuous. It will not be siloed. So that's the whole design philosophy where we have adopted technology, and that's the way we have kind of implemented it.
That's a very good sort of way to look at it. And I like when you said we have achieved a sweet spot there, which is creating a balance between the two sort of Bharat and India. Because technology is evolving so fast, Mathew, that keeping a sort of pace with that, right? Today, there was an AI summit which almost 50,000 plus people attended, and government of India was really involved into it. And we are talking about all of those playing an important role. Give me an example where this sort of phygital, you said, right, it has played an important role so that the audience of today can understand what does this phygital mean in execution.
Sure. So let me take a couple of examples, in fact, right? This is consumer durable loan, right?
Yeah.
Now, you have two choices to buy a mobile phone. You could go to one of the e-commerce sites and buy it, or you can walk into one of the large format retailers or even a small format retailer, right? You can walk in there, they will assist you, they'll walk you through the phone features, then you'll make up your mind and say, okay, I need a loan to buy this. And that's where HDB steps in. Now, what we call this is more of an assisted journey, where a human being or an employee of HDB is sitting at that large format retail and helping you with the decisions on the loan process and helping you through the whole process. The same person could have gone to a e-commerce site and done the same journey, but it will be a completely unassisted mode. They could do the whole thing, right? You see, at the end of it, what they are guaranteed is a loan, right? You buy a big format, you buy one of the fanciest phones, or you buy a mid-sized phones or a mid-end phones. The outcome is predefined. So there are certain sets of gating criteria that we define that you have to be, where we determine what's your eligibility and and the phone is given to you either through the e-commerce site or through the large format retailer. And what we do, and you as an individual can just walk out, right? Now, if you look at this, we are handling both the physical world and the digital world. The engines are the same. The outcomes are the same. We do not make a differentiation between what the physical store experience left you versus what the e-commerce store left you. Now, this is one scenario that I was talking. The other product that I'll closely talk about is gold loan. Right. Now, gold has an interesting aspect to it. You typically take a loan you need to deposit your ornament, right? And some of these, we do a valuation of the whole thing, determine what is the purity, what's the caratage, and then say how much the loan is, what's the amount of loan we can give you, right? Now, to do that, you can do half of the journey by yourself on the mobile, where you click a photograph, you do all that stuff. We give you a high-level ballpark estimate of what we believe, basis some AI-based lookup of the color of the gold, if there are black spots on that thing, right? If we can determine, is it something which is more newer in a design or something that's an older design, right? So then we know something is a family heirloom versus what you have just bought recently. So some kind of parameters can be used to determine and then say you're good for this number. But if you walk into a store, we can evaluate it you further and give you a sharper number. It could be even higher than what we have said, right? Now, this is another example of a phygital experience where now a customer has a choice to get a sense of what it could be and then basis his or her comfort, determine if they want to walk into the branch and do the physical part of it.
Excellent. I think when you talked about the community side, and obviously CSR is now becoming part of the business strategy as such, and HDBFS seems to be implementing and executing it very well. So So my question is very different because India is a very different country, right? There are many countries in one country.
Right.
There are many vernacular languages and sort of touch-based cultures, etc. Now, doing the same thing as communities in different culture. One, if it would have been one big culture like an English-speaking population, then would have done. You have so many languages. You have field force. You have got branches. How does this get implemented? It's kind of a huge challenge at your end.
It is, but think of the management mantra of think global and act local. Just bring it into the Indian context. Think global in an Indian context and act local within the geographies that you work on. Now, once you do that, you will realize that the same the philosophies can apply here. And obviously, there are nuances geography-wise, culture-wise, customs-wise, language-wise, right? And that's the experience we want to give our customers. We are not doing the boilerplate approach.
Okay.
We don't want that boilerplate approach. But the trick is you still have to do it with economics of scale in mind.
Yes.
It's a retail footprint. The smallest ticket is really small and the largest ticket is also small compared to possibly a corporate book.
True.
But how do I do this? And if you think this is an element of hyper-personalization and hyper-localization coming in. And all these areas, we believe that technology can play a bigger role. And that's what we've been doing. So, and there's obviously a lot of learning along the way, right? I mean, we think there's the right way to go into a market. And the market tells us maybe it's wrong, right? So accommodating this feedback and then retweaking our go-to-market strategy is also important.
So two things are coming out in my mind, right? And one thing is HDBFS is also a sort of a new startup, I would call it. But at the same time, you have been in the bigger organization, you're subsidiary of a bigger organization. And you're also competing with some digitally, sort of first-time digitally savvy organizations who are fintech companies are coming in, etc. Now, what do you think? How do you differentiate there, or or the path for everybody to see that HDBFS is equally good and bad, or whatever is the digital world looks like?
So what we learn from them, right? There are certain things, innovative things that they keep on doing, right? But what we have mastered is predictability, right? One of the things that we keep on saying, it's not a sprint, it's a marathon, right?
Okay.
And that's something that we have built into our ethos, saying that it's not just tomorrow's race. You got to do this day after day after day for years and years to come, right? And that's something that we take very responsibly because you need to understand, right? I mean, it's not just the customers who look up to you.
Yeah.
I cannot just give a loan and then just disappear the next day because I don't have enough funding or those kind of things. Reliability, the being there for them is also important. The same is for our investors as well. They're putting in their hard-earned money into a company, and the expectation is that they need predictability. They don't want sporadic high gains, high losses, right?
Yeah.
That's not what they want. They want is growth, and growth over a year-over-year basis. And what are we doing to kind of ensure that their money is safe and growing at the same time? And that's the focus. And if you bring in the third dimension to it, there's a regulator.
Yeah.
And the regulator has certain expectation. We are in the upper layer as defined by the regulator. So obviously they are looking at us, and being part of the bank's, HDFC Bank's vintage, they're expecting us that we maintain the same level of governance that our parents. Right?
True.
So the brand name has to signify that what we're talking about is also part of the actions that we do. So if you look at all these three dimensions, we believe that the new age startups, we get to learn, we get to partner, we get to compete. All three dimensions we are doing with them. But at the same time, we have our journey laid out. The roads are very clear, right? It's smooth most of the times, right? With a few hurdles thrown in. But we are razor sharp as to where we need to go, laser focused to that outcomes, and we keep on delivering it quarter after quarter, year after year, and that's the whole thought process.
So even though we talked about phygital giving loans, reach in the remotest areas of the country, you have branch and as well as online. The last pillar is obviously when we lend money and our earning comes from collections and payments and etc. I think that's a very strong sort of ask from any organization, that how strong your collection process is, right?
Right.
NBFC sector is projected to sort of grow 14 to 15% FY26, investment surging 20 to 25% year on year, largely focused on empowering field teams, etc. Now, when it comes to tier 2, tier 3, over 60% of retail borrowers face income volatility, right? They don't have a fixed income, there is uncertainty due to seasonality, informal employment, especially in tier 3, tier 4, type of sort of areas. Studies shows that the context-aware collections can improve recovery rates by 20 to 30%. Right? Now, what signals the I know HDBFS has mastered collections, right? I'm not asking for trade secret, but some aspect, some perspective on collections, why India is what India and Bharat is what Bharat.
So, I wouldn't say HDBFS has mastered collections, right? I mean, nobody can ever claim to have mastered collections, right? Then the collections team, collections only comes is if the customer doesn't pay up on time. And so there's a good side of collections where if you do your payments on time, the collections, the way the world looks at it, doesn't even exist, right? You'll never have a problem in that sense. It's only when you default on your payments is when the collections, as what the industry looks at or what's glorified in the whole the visuals, it comes into play. So what we have done as an entity is a loan. It's easy to disburse a loan. That's the simplest of the problem, right? I'm sure you'll get lots of people who are wanting money, and that's the easiest problem. But to get the money back is also very important. And that's what we have been focused as a company, right? Now, some of these things are a good learning for us is because we've been doing collections not just for ourselves, but we also do it for the bank, right? So we've kind of along the way learned what it takes to collect, right? Now, some of the things that we talked about is the early warning that you talked about.
True.
Now, collections, if it's a sales conversation, typically you'll say that the conversations are sweet, it's nudging, it's just to culminate into a sale transaction.
True.
Right? Whereas the collections, the way people look at it is, it's all argumentative, it's loud, it's in your face, right?
It's negative.
Yeah, it's negative in that sense. But the way we look at it, collections is not, that's not the approach, right? We need to understand our customers' body language. We need to understand what is their verbal cues, which direction, and maybe softly nudge them, right? And do not take them to a point where there's a breakdown in communication.
Okay.
That's the whole thought process. Now, to achieve that, obviously what we have done is, we might have over-invested in our collection thought process. And the way we have done it is, every conversation that we have with the customer, be it in person at the customer premises or through a telecalling setup, right? We have ensured that all these conversations get recorded. Now, when it gets recorded, what we also do is there's a function within the collections who reviews all the calling and then determines could the calling have been improved for better outcomes. And this is learning that we are continuously taking because there is a cost attached to every call that we make.
True.
Right? So how do we reduce the call and reduce the friction for the customer is also important. So what we're trying to do is these learnings then go, and what we now started doing is using AI for a lot of things.
Oh, very nice.
Earlier it was humans doing these things, but what now we are trying to do is bring out the AI element to it, analyze all these things, and figure out how could I prevent something going into the 0 to 30 bucket.
Got it.
Right? And if the collections is proper or the payments are done on a proper basis, it doesn't even have to go into that bucket. So maybe soft reminders that your EMI is coming up due, just asking them to check if their accounts are sufficiently provisioned, because we typically are completely digital, so we have e-NASH mandates, right? So it just gets, so can I, a few days before the mandate gets banked, can I intimate the customer that, hey, your mandate is coming up for a debit, right? So some of these things, what we realized is that kind of reduces the number of people who fall off that bucket into the next bucket. Now, again, we get into a promise to pay kind of a conversation with them, where they say that, okay, I have this specific time. You talked about vagaries of the nature or whatever, right? So if you get a promise to pay and the customer in the past has demonstrated that they honor that promise, we say that, okay, let's take, we give them that opportunity, right? But if there are customers who typically don't pay up on time, then we have to maybe have a slightly more evolved approach with them, where we might have to say that, okay, it reflects poorly on your credit bureau scores. Why would you want to do that? So it's not, I mean, it's basically nudging the customer behavior in a sense that they understand that it's their responsibility to return back the money, what they've taken after they, I mean, and that's the hygiene that we want our customers to kind of do that. And it's not just with us. They could take a loan from any of our competitors. And that's the same behavior we would expect them to demonstrate to our competitors as well. So,
so what you are saying is basically signaling, right? I mean, how do I get the right signals at right point of time, internally as well as to customers as well, right? I mean, reminders, payments, and etc. Engagement history, prior payment history, etc. That's a nice way to look at it. I'm sure technology is going to play a very important role. But I can't go further until I talk about something called DPDA and regulatory environment and data breaches, because technology is so widely spread today. I think DPDA Act, which is now being enacted, right, is pushing organizations. How do you collect? How do you store? How do you manage? And there is not an awareness in the consumers as well, right? I mean, I am freely giving my data today. I mean, but now DPDA Act is pushing that envelope further away and saying that you are not freely giving until you the consent. It's going to make it difficult for you, or a fundamental design needs to change?
So, I mean, I wouldn't call it difficult, but we'll have to do a course correction, right? And because our philosophy still remains, the customer is at the center of things. The data that belongs to the customer belongs to the customer. So we have to treat it in that nature. So the way we are looking to align with the DPDP Act is to ensure that the customer is comfortable with whatever data that they provide. They understand what is the intent of what the data is being used for, right? And it's a time-bound mechanism where they say that, okay, after this period, you can no longer use this data, right? So this is broadly in lines with what the DPDP expects. Now, obviously, this makes it a little more challenging for us in the sense, like, for example, if a customer says, forget my data, but if the regulator says, you need to keep the data for 8 years, and that's for us, that's the expectation from the regulator. For 8 years, the data has to be retained until the loan matures, and 8 years thereafter. That's the requirement from the regulator, right? So we have made representations to the regulator, and the regulator understands that, and they are also talking to the Ministry of MIT and saying that, hey, in my line of business, the area that I regulate, these are the mandates. And so what we have seen is there is conversations happening, and we are saying that, okay, these things we are allowed to do, these things we are not allowed to do. And it's a new area. It's evolving.
Still evolving, right?
Evolving. So I'm sure there will be a lot of learnings along the way for the industry, for us as an entity, and for the customer as well, because and we'll find a sweet spot at the end of it.
Many a times I see stakeholders' focus is, when first is the top line, get me the revenue, get me the book, asset book. Then suddenly the focus would be margin side, and when you look at the margins, the cities, top 20 cities will give you higher margin. The next 100 cities in Bharat would give a less margin. Would this always be a tug of war internally, thinking differently, or strategically there are different divisions within the organization handling different segments of the customers? How do you think this is happening today.
So for any successful organizations, right, I mean, there will be not just one KPI that you will be looking at.
Okay.
It will be a multi-dimensional KPI model that you're kind of focused on. And the financial ratios that you're referring to, and that's what differentiates us as an entity versus some of the startups.
Okay.
They would be in a, they will be just given a free hand, say just acquire customers. Don't worry about profitability.
True.
Don't worry about cost to income ratios. Don't worry about NIMs, right? But we as an entity saying that, okay, we have to be 100 on 100 on each of those things. So that's a given. That's hygiene for us, table stakes for us. But they'll also say that, okay, why couldn't we be 125 out of 100? So that's where the growth aspect comes into play. The profitability comes into play. So for us, we look at it in toto and say that every aspect of the parameters that we are measured on is important. And as an organization, that's inculcated in each one of us, saying that that's the way we have to do it.
So type of a balanced scorecard being...
It is a balanced
scorecard being driven. No, I agree. I think, cash burn is one of the metric which a startup is looking at it, how much I am burning the cash. And that has changed largely. I think the dry powder is very high, but the investments have gone down in the sector.
Right.
Another aspect of the market, and specifically in the Bharat which we talked is 500 million Indians don't have formal credit scores. But they have UPI transactions, they have phone usage, they have their digital behaviors, and a lot of startups have started sort of enacting on those behaviors, right? And giving maybe credits lines and opening credit lines without having a credit score on that side. These could be like agri-tech also, these could be e-commerce, apps site, right? Within an app also I can take a loan as well. So these are also delivery platforms there. The winners won't be the fastest lenders, right? They'll be the ones customers trust to deliver credit seamlessly and right where they need it. Now, as a technology leader, as personally, not HDBFS, right? As personally, Mathew, yourself, how do you think the shift is going to be, right? How do you think, what's your defining move to make this shift in coming years, 26, 27, 28, like?
Right. So a very interesting question that you brought up, and I must bring you back to 2 or 3 questions back where you talked about DPDP.
Yes.
Right. Some of the things that DPDP prohibits you from doing are some of the things that you talked about doing right now. But there is always a point where we can work between those 2 things and still not violate the DPDP commands.
Okay.
Right. Now, for example, if a customer comes to me and says, I want a loan from you, and I will tell them, okay, I'm good to give you a 100 rupee loan, but the customer says, no, I need a 110 rupee loan. For that, I'll say, give me a few more data points. I can deliberate whether I can do that. Now, one of the data points could be as simple as, let's say, you have a mobile phone number that's given to me. I validate the mobile number, and the mobile number has recently been ported from one telco to another telco.
True.
Right? I realize that this person is passionate about the number that he or she has, which means he is willing to go that extra mile to do what is required to port the number.
True.
As opposed to another person who gave me a number, it's like a 6 series number or a 7 series number. I know that this person is not passionate about the number, right? Now, can I give this 10 rupee more is a factor of these kind of attributes. And some of these attributes do come, but it's all with the consent of the customer.
Understood.
Right? So, I still think we can do these things and we are doing these things.
Okay.
But we will also ensure that we'll not violate any regulatory guidelines or any statute of the
Obviously. So I'm sure balance has to be brought in. And as things, DPDP is also evolving, right?
Correct.
Different industries, different type of organizations are getting clarification what can be done, what cannot be done. But the footprints are there. And the emerging Bharat, I would call it. I mean, when you look at, one end you look at Kumbh Mela, and in the last year or last year, some half the population of India actually took the dip there.
Correct.
And on the other hand, Ahmedabad has got 3,000 startups, right? Jaipur has got 2,000 startups.
Right.
So even, I'm just not talking tier 1 cities like Bangalore as being said second Silicon Valley.
Right.
On the other hand, this is happening. There is a emerging Bharat which is very different.
Correct.
And I'm sure, as you said, it is the biggest opportunity for any organization today.
Correct.
And thus the Crafting Bharat platform, we always want to bring out those insights which focuses for an organization where the opportunity is very high and yet to be sort of, even scratch the surface as we speak today, right? So thank you for being with us.
You're most welcome.
We could have continued this discussion forever. It was becoming interesting and getting warmed up, but time is always the constraint. And your insights, your learning is way beyond anybody's, I think, because you're sitting on the center, right? As a technology leader, you're talking to business leaders, you're talking to consumers, you're talking to evolving technology, which every day is something new happening today. I think that hot seat gives us the right perspective. I call it a vantage point, and you know it where it is hurting badly, or you know it where it is giving you really a nice uptick in the growth as well. Thank you very much, I must say, for your time.
It's been a pleasure. Thank you for hosting me here. Thank you.